Thanks so much for tuning into this earnings conversation with InfoEdge. They came out with what I would call a mixed financial performance for the quarter right now, when we talk about the year as well, because sequential revenue growth was slightly below estimates, but EBITDA margin was above expectation. However, the conversation with Hitesh Oberoi is really not just about what's happened in the quarter, but the year at large. And with the winds around, both tailwinds and headwinds, how does he believe the first quarter or the FY24, what does it hold in store? Hitesh, great having you. Thanks for taking the time out. And in times of, I mean, it must be interesting times because we'll talk about the quarter, but just trying to understand the macro first. At times when IT has these headwinds and maybe hiring slows there, but real estate is in a bit of an uptick, and that is going well, and the economy seems to be going strong as well. How do you gauge how business could get impacted either ways for the course of the year?
See, we've had a terrific 2 years as a company, thanks to the uptick in IT hiring we saw over the last 2 years, post-COVID. Now, things on the IT hiring front have started slowing down a bit, and this is more sort of linked to what's happening in the US than anything else. Now, in the past, if history is any guide, what we've seen is that every time there's a slowdown in the US and there's a recession, it does not last for more than 2 or 3 quarters. And post the recession, there's a surge in outsourcing to India. Because India is a solution. Because companies in the US, if they want to cut costs or if they want to get talent, there's nowhere else to go but India. So that's what has always happened in the past. Now let's see what happens this time around. On the other hand, like you said, the non-IT market is buoyant. The Indian economy is doing quite well. We saw a surge in non-IT hiring post the economy opening up after COVID. The sectors like banking, financial services, insurance, retail, travel, hospitality, construction, real estate, they're all doing well. I mean, they're all hiring a lot of people. And now we are seeing growth, go beyond small, big cities. I mean, earlier, the big cities are the one which led growth. But now we are seeing more activity in tier 2 cities and tier 3 cities as well. So that's the good news. Real estate, the 99 acres business has also started doing well, thanks to the upswing in real estate. After a long time, the sector was down in the dumps for several years because of RERA, the GST, demonetization, COVID, the NBFC crisis. Now, after a long time, interest is back in real estate. Prices are moving up. Volumes are going up. There were no new launches for a couple of years because of COVID. So inventory of new homes are at an all-time low. So the real estate market should be solid for the next few years if things are okay on the domestic economy front.
Yeah, well, it helps the cycle, so all of us are hoping for that. I'm just wondering, Hitesh, does real estate buoyancy, while it impacts 99 acres for sure, does it in any fashion have any impact on the hiring activity at all for Naukri? I mean, is it moving to a phase wherein at some point of time it will start having impact?
Actually, if hiring does well, then real estate starts to do well after a while, because once people if people make money, they do well, they sort of want to upgrade their lifestyles and they need avenues to invest. And that's what starts to happen. So that's what we are seeing right now. Partly, it's a result of, no construction activity during COVID and therefore a lack of inventory. Partly it is that people after COVID, they want to move into bigger homes. They think that's what is, for pre-COVID, people had got used to this idea of a rental economy of, Ola taxis and Uber taxis and staying on rent. I think that thinking is changing once again. People want bigger homes. People want a good lifestyle. And incomes have gone up in the last 2 years because the IT sector did really well. So that's, I think, what is driving the uptick in real estate prices. And, the other thing which sort of matters is home interest rates. And interest rates have been reasonable for the last few years. And if they continue to be reasonable, then things should be okay.
No, sorry, Hitesh, what I meant to ask was maybe a convoluted question. But if 99 acres is doing well and real estate is doing well, does it impact the resume hiring business at all? Is real estate as a sector moving towards there wherein organized hiring is happening?
Yes, real estate is one of the sectors we cater to, but it's a tiny sector in the grand scheme of things. It's not more than 4-5% of all jobs on Naukri.com. Okay. But what we've been seeing is a surge in activity in what we call the infra sectors. So sectors like construction, real estate, heavy engineering, oil, gas, energy. These sectors used to be a big part of our hiring till about till 2009, 2010. But then we saw a slowdown in these sectors, because of various reasons. But now we are seeing jobs come back in these sectors. Real estate is a small part of the pie, but collectively these sectors add up to a lot.
Got it. Yeah. Now, I was just trying to understand if there is some bit of a change out there, because so many companies are talking about expanding the workforce. I was just trying to wonder if it's still organized largely or it is also moving there. But fair point. I take on board what you said. Now, when I read reports, they suggested two numbers: that consolidated billing for the quarter maybe that remains strong, but because of lower A&P expense, you managed to keep flattish EBITDA margins. Now, my question is, would you consciously as a company take a call to keep these under check in order to manage EBITDA margins if indeed IT hiring is slower? Part one. And would console billing anyway still look up even if IT hiring slows down even further from where it is right now?
See, as a company, we don't manage EBITDA margins. Our EBITDA margins are at an all-time high, and that's because we saw crazy revenue growth over the last 2 years. Now, see, we have figured out areas which we want to invest in as a company. We are investing, for example, in the recruitment business. We've been investing in AI and machine learning for the last 5 years. Now we will start investing in generative AI capabilities. We've been investing in a blue-collar job board that does not generate any revenue, and that's been going on for the last 3 years. There are multiple such projects going on in the company which are either pre-revenue or which I lose money, but they're important for the long run. So we will continue to invest behind these projects. In our regular operating businesses, we'll also get regular operating investment, assuming there is no slowdown, right? We are a cash-rich company. Our EBITDA margins are really healthy. In the past, we've never seen any slowdown last for more than 2-3 quarters, right? Even the COVID slowdown, things are okay after 2-3 quarters, right? So we think that's what is going to happen this time around as well. And what we have always seen is that if we keep investing through the slowdown, then in the end, it yields returns for us. We are able to gain share. A lot of other companies slow down during slowdowns. So we are not going to, we're going to continue to press the pedal on growth. We continue to press the pedal on investments. Now, if for some reason revenue growth ends up lower than expected, then margins take a hit. If on the other hand, we see a strong recovery in the second half, then margins should be okay.
Okay. Well, that gives us a sense for the year and no point squibbling over small numbers for a particular quarter. I have one final question, Hitesh, and that's trying to understand how do you, plus your the whole top deck with you, think of taking InfoEdge from where it is right now to where it could be, say, 3-4 years down the line? Because I'm just saying from a market's parlance, everybody still kind of correlates. Acha, Naukri ne theek kiya, InfoEdge is doing okay. Other things are there, but Naukri is the predominant thing. Now, I'm just trying to understand 5 years out, 4 years out, 3 years out. I'm sure you guys think that out because of the nature of the businesses that you invest in. How do you foresee InfoEdge to be versus what it is right now?
See, we have so many sort of opportunities in front of us. If you think about it, the Naukri business is still growing like a startup. It's as if it's growing in low single digits, and we are trying to improve margins. We can continue to grow that business at 20-25% per annum and generate a lot of cash from the company if the economy is supportive and for the next few years. And we see tremendous areas of opportunity and investment for the recruitment business, which is our core business. The 99 acres market, like I said, was down in the dumps for many years. After a long time, we are seeing a recovery in the market. Real estate cycles tend to be long. They tend to be deep. When real estate goes up, it stays up for 8-10 years. When it goes down, it stays down for 8-10 years. So hopefully, the next 8-10 years should be good for real estate. And 99 acres is uniquely positioned. We've already invested a lot in building the platform. And if we get 20-30% revenue growth year on year from here on, it can become a fairly large business over the next 4 or 5 years. In matrimony, we've tweaked our model. We've gone freemium. It's working well for us. We've lost revenue, but we are gaining share. And our losses are sort of reducing in the matrimony business. The Shiksha business is already profitable. And now it's trying to expand into the study abroad segment, which is a fast growing segment, which is a large segment. And outside, we have Zomato and Policy Bazaar, which are now inching to break even. And the management is confident that they can make these businesses profitable over the medium term. And they are sitting on tons of cash, so they also have a lot of opportunity. And our AIF portfolio also continues to be okay. Some companies may be under stress because of what we are seeing in the tech investing market, but by and large, the portfolio is doing very well. So I think we are uniquely positioned to grow the business really well from here on for the next 3-4 years.
Okay, this is my final question, Hitesh, because you guys look at so many futuristic businesses. The talk of town is what AI could do to disrupt, dislocate, or upend business models as well. In case of recruitment, they talk about so many changes that could get impacted because of AI. But I'm sure that market opens up in a big way. And in India, there is also other things, old economy, green hydrogen, data centers, etc. I'm just trying to understand on the recruitment part or on the business model part, what do some of these new things like AI or some other sectors opening up do for the business?
So we can spend a long time chatting about this, but to answer your question, see, every time there's a new technology, and which is a really disruptive technology, like digital was, or the internet was in the 90s and early 2000s, like the smartphone was in 10 years ago, and like generative AI or electric vehicles or some of the other things you mentioned are today, it opens up opportunity, right? And of course, it can be a threat to incumbents if they don't evolve their business, but it can also be a huge source of opportunity for companies to get it and to invest in it and who are proactive, about some of these things. And that's what we've always seen. We were able to leverage the power of the internet in the 2000s. We were able to leverage the smartphone revolution in the 2010s for ourselves. There was a point in time when we used to wonder how will people input their resumes on the mobile phone. But it's happening. 80% of our traffic is on the phone, right? And similarly, we started on investing in AI and machine learning early. We've been at it for the last 5 years. Generative AI opens up many more opportunities. We can, leverage generative AI to improve the user experience for both job seekers and recruiters on our platform. So we can embed it in our existing products to improve the experience. And yes, we also need to worry about disruption, which could come from anywhere. Somebody may totally reimagine how recruitment can be done going forward. And that may not happen overnight. That may happen over 10 years. But we need to be watchful of such sort of attackers or startups and be conscious of that. And also maybe perhaps attempt to do it ourselves inside the company.
Okay. Well, maybe at some point of time, Hitesh, would be lovely to have you on our show Insight to try and talk about the recruitment business and the various factors impacting it sometime in the non-result season so that you're at liberty to talk.
Happy to do that.
Great. Hitesh, thank you so much for talking to us today and all the best for the quarters ahead.
Thank you.
And viewers, thanks for tuning in.